Good afternoon. This is Brian Shannon from AlphaTrends.net. Today's Monday, the 28th of January, 2008. The market closed, and we got back Friday's losses. This market's starting to look maybe a little bit more constructive, but still the burden of proof is and remains on the buyers here. We've still got the declining 10, 20, 50, 100, and 200-day moving averages. The market has gotten pretty oversold here, obviously, with this big leg lower, and perhaps we're starting to see the first higher low after this strong bounce we saw here. It would be nice to see a little bit more volume in here, but for now we'll just take the higher prices as they come. Today, again, we gained 1.7% on the S&P 500. Still, there's gonna be the potential for pretty significant, I think, resistance near that 137 level, which was the August lows and the level that was tested on Friday. If we look at a 10-minute time frame, you can see here it is starting to look more positive with this now rising 5-day moving average. And you can see that it took a couple days for it to flatten out. The market tested it as support, found support there, and now it's starting to move higher. So this level here at about 132 will be an important level of support. If it breaks below that, then you want to get a lot more defensive. Again, we've got a lot of earnings coming out right now, and we've got the Federal Reserve discussing interest rate policy on Wednesday at 2:15 Eastern. Is when they will announce any changes to monetary policy. But right now the S&P 500 is looking a little bit more positive. If it can get above and hold above that 137 level, then perhaps we can look at a larger time frame here in a moment. And you can see this downtrend line does remain significant here as well since the beginning of the year. So I think if we break the downtrend line from the beginning of the year and get and hold above that 137 level, 137.5 really, then we can start to look at the potential for maybe a move up towards the 140, 141. We still remain in a downtrend, and any upside trades will and continue to remain higher risk here. So continue to be very defensive in your approach. The semiconductors, this group here, again, no reason to think that they're going to turn around, but the key level in here is this 365 level. Getting and holding above that level for maybe a half hour or so could get some shorts a little bit nervous and motivate them to maybe cover some of their position. But above 365 is going to be the key level here for the next couple days. And breaking back below 350, then you want to get a lot more defensive. This 5-day moving average is flattened out and is starting to rise in here as well, so that's also something to be aware of. Then we want to take a look at the Russell 2000. This market gained $1.45 today, good for 2.12%, and I started pointing out this inverted head and shoulders pattern here on this time frame. Again, the the key level here is at about 70.5. That's about where we find that neckline and prior resistance as well. So in this 170 to 170.5 level, it's good to see that we are making a higher low right in here, and we've got that rising 5-day moving average. So intermediate term, it looks like the buyers are starting to regain control. But again, when we look at the daily time frame, there's still a big problem here with this large breakdown. Perhaps, though, we're headed up towards a test of that 73 level. That would be a great rally from here, and certainly not out of the question with this what looks to be a pretty solid, fearful shakeout here with the largest volume coming at the end of the move. Now, it does remain suspicious that this market continues to rally on lighter volume. However, again, only price pays, and when we look at the day-to-day activity, we're starting to see a more bullish pattern develop. If this inverted head and shoulders pattern is to take hold, then we could say that we could be conservative and say that the head is 65, and I always like to measure these very conservatively. But if we go straight up to the head, the neckline rather, that's about 5 points. Add that to 70, and that would indicate a target up near 75. I really don't think that's realistic, but that's how you would come up with a price target. We remain in a downtrend, so you want to be conservative with your upside targets, and if you're holding long positions overnight, then you want to be very careful with them. Make sure that you're trading a very small share size. And again, we've got a fundamental catalyst in these stocks due to the fact that we're in the middle of earnings season right now. So be sure to be aware of when the companies are reporting earnings for the stocks that you trade. The NASDAQ 100, if we look in here, this it just remains a giant mess. The August lows, we could continue to kind of flirt with that area near, I guess it was 44.39 was this level. Closed right below it again today. The market found resistance at the declining 10-day moving average on Friday and sold off. And today it rallied, but on light volume. And this market, once again, is showing relative weakness. It was only up 0.7%. The SPY, the spiders, were up 1.8%, and the Russell 2000 were up 2%. So it continues to be the weaker area of the market. And when we look at a shorter term time frame, again, the 46.50 level, that's really going to be, I think, the most important near-term level of resistance for this market to clear. It is still quite a bit away from here, and even getting from 44.5 up to 46.5 would be a nice move, obviously. But we're not seeing the same type of strength in this market develop. We've still got that 5-day moving average declining. It would be easy for it to flatten out and turn higher here again. Keep your eye on today's lows on Tuesday. So about 43.5, getting back below that, then maybe we've got a bigger problem. But the market overall is showing a little bit of signs of starting to stabilize here. Maybe the buyers can build something from here, but cast an eye of suspicion on this overall because we do remain in a downtrend.